Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
That's right. I'm Emaad Akhtar, and I'm hosting The Bigger Picture. Now, there were plenty of market movements last week, and a huge one, the looming tariff deadline coming up on the horizon, July the 9th. Everyone waiting with bated breath to see what transpires in the meantime. To talk all about it, I have on the line Jingyi. She's the Associate Director at S&P Global Market Intelligence. Good morning, Jingyi. How was your weekend?
Well, good morning, Matt. I think we're all just reading the news at this point to see what's going to happen, but definitely interesting one to chat today.
Yeah, for sure. Before we go into what's going to happen this week, let's revisit what occurred last week. Starting with Singapore PMI numbers hitting 50 for June, an increase, a marginal one, albeit, from 49.7 in May, which suggested that manufacturing activity staged a modest rebound after languishing in contraction territory for 2 straight months. A nice way to kick off the second half of the year, right?
Well, definitely. I think that this is representing what's happened in June, and I think the situation has really improved slightly for the APAC region, particularly due to the mainland China conditions, where we did see some of these frameworks being set up between the US and mainland China, despite a deal not being reached at this point. So that helped to lift up the situation in mainland China based on what we see from the Caixin PM consolidated by us at S&P Global. And certainly I think, that helped to lift up the APAC picture as well from the manufacturing side. Though I just want to point out broadly, we also did see, Singapore PMI, the whole economy was consolidated by us, showing still solid growth in Singapore at this point of time. A lot of the, activity is going on beyond just manufacturing services as well. And also more broadly on a global scale, if we were to take a step back and see what the picture is like, we do see that, the S&P Global data here for the global picture showing expansion at the fastest rate in 3 months in June itself. To also just really want to caveat, because I know you want to talk about the Fed as well. I think what we did see, however, is still a lot of this inventory building activity in the U.S. that's actually helped to show up growth in June itself, because I think when you look at sentiment picture, that's pretty much subdued and still unchanged, because I think the GSIS itself, from what we see from comments from panelists, businesses themselves, they are still actually a little bit uncertain and hesitant to actually make a lot of decisions into the second half of this year, where we do see the potential for growth to be more subdued should the tariff outcome actually be a little bit more less ideal, at least in this week.
Yeah, so worldwide business activity expanding at a slightly increased rate, both in Singapore and globally as well. Let's move over to non-farm payrolls, traditionally a great indicator of the health of the U.S. economy. It seems like the labor market in the U.S. held up better than expected, because we were looking at about 110,000 jobs expected for the month of June, but what actually transpired was 147,000. So the labor market showing resilience in the face of some pretty strong headwinds. What do you make of that? Why such a big discrepancy between the two numbers?
Well, certainly, Emaad, and I would say that we also seen unemployment rate actually tick down itself to 4.1%, and also previous months there were actually revisions up for the payrolls itself. So I think broadly the picture here actually speaks one of the employment conditions in the U.S. still holding up. Although I do want to point out that this is actually below the 2024 average of around 168K. So it's showing that a softer condition still so far in 2025. I think broadly the picture here is one where, recalling what we just said about the U.S. condition, there's a lot of inventory building, that's activity that's holding up in the U.S. And over and above that, I think just because of the uncertainty going to what tariffs may actually look like by the end of this year, I think a lot of companies are not willing to make a lot of the decisions, even though they are still cautious as well with adding on staff. And also I would say to some extent there are hopes as well that the easing of interest rates going to help support growth in the U.S. in the second half. But I think what's important for us to also point out, just looking at the data itself, is that we see from the survey data that there are actually spikes already in terms of inflation. I think that's going to act as a little bit of more barrier to the Fed themselves cutting rate, at least into the September meeting, where a lot of the hopes have actually gathered for a 25 basis cut. That has actually been slightly tamed by the June employment report, of course, but I think, the extent to the increase of price increase is still something that is highly uncertain at this point. And S&P Global Market Intelligence, we do actually forecast the likelihood more towards the December meeting, where we'll be seeing that 25 basis cut come through. But broadly in the second half, I think you may be expecting a bit softer situation in the U.S. demand.
Yeah, as you said, all up in the air, uncertainty prevails because of that reprieve on U.S. President Donald Trump's global tariffs that is set to end on July the 9th, just 2 days from now. And that casts a bit of a shadow over corporate profitability and inflation, as you've mentioned. Major U.S. trading partners were hurrying over the weekend to try and secure deals or lobby for extra time. In fact, the Treasury Secretary Scott Bessent indicated some countries may be offered a 3-week extension to negotiate. What do you make of the looming deadline?
Well, certainly, I think the even before some of these comments coming through from the authorities there, I think the expectation actually from us is also what is probably a more pragmatic mix of tariff pauses for countries where the U.S. themselves are perceiving positive negotiations are ongoing, and versus in another picture where there's perhaps not as much progress as they would like that to be, and that could actually result in higher tariffs for the countries or territories involved. So from that perspective, it's actually expected to be a mix already. And even if, I think they did themselves in the comments say that it's going to be big announcements, because we do see the potential for trade deals to be established in such a short time being rather challenging. This is still going to be something that's going to be long drawn out. So it could be frameworks or a temporary establishment of some sort of a trade deal actually being announced in the time being, or to the extent where, as you just mentioned as well, there could be more extension, where there could be a trade deal that's going to come into picture eventually. So I think the broad takeaway here is that despite the fact that we do have this looming deadline of July 9th, I think the expectation, however, is that it's still going to be a rather long, drawn-out process into the second half of this year, and definitely I think we'll be watching quite closely as the announcement comes through to a large extent as well. I think it does depend as well, the situation is fluid. It does depend on a case-by-case basis decision as well by the president himself, Emaad.
Yeah, a few deals, notably with the UK, Vietnam, and a framework for China have so far been announced. So at this point, we can only speculate whether there will be further deals with US trading partners. To end off with, is there anything else investors should be keeping an eye out for this week?
Certainly, so I think it is a week we are, as already discussed, watching what's going to happen on the trade front. But, tuning to what the economic situation is like, I think among the highlights that one want to watch are actually the likes of the Fed minutes. So that is going to be something that we want to focus on in terms of getting more of these hints as to what could actually lead the Fed to actually lower interest rates, resume the cycle itself. But besides which, we do have, the key data, including UK GDP numbers, and also China's inflation and trade data. Of course, here in Singapore, we would have the, advanced second quarter GDP released on Friday for a check on economic conditions. And last but not least, central bank meetings around the region, including RBA, RBNZ, Bank of Korea, and Bank Negara Malaysia, all could potentially be seeing rate cuts on the table, especially given the ongoing trade situation and still subdued inflation picture. Emaad.
All right, so plenty on the menu, but the one date that investors, traders, and market watchers will be looking out for is July the 9th, and that is when April's pause on higher U.S. tariffs is due to expire. Jingyi, thank you so much for your time this morning.
Thank you very much for having me.
You're very welcome. That was Jingyi, Associate Director at S&P Global Market Intelligence.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.